name is Margus Sepp and I lead the trading department at Fastflow Finance. In today's video, I would like to discuss a topic that becomes more important every year: the difference between noise and opportunity. If you spend enough time in financial markets, you begin to notice something interesting. The amount of information continues to grow. Every day brings new headlines, new predictions, new opinions, new discussions, and new reasons why the market is supposedly about to change forever. At first glance, this may seem like a positive development. After all, more information should lead to better decisions, but in reality the opposite often happens. The modern financial world does not suffer from a lack of information, it suffers from an excess of it. Today, information is available to almost everyone. A market update can travel around the world in seconds, a single opinion can reach millions of people within hours, and entire narratives can emerge and disappear within days. As a result, many market participants find themselves constantly reacting to headlines, reacting to social media, reacting to market movements, reacting to the opinions of others. But reaction and understanding are not the same thing, and this is where one of the most important differences between professionals and everyone else begins to appear. Professional market participants understand that not everything deserves attention, because attention is limited, time is limited, and focus is limited. The ability to filter information has become just as important as the ability to find it, in many cases even more important. One of the most valuable lessons markets teach is that the loudest signals are not always the most important ones. The biggest headlines often receive the most attention, the strongest emotions generate the most discussion, the boldest predictions attract the largest audiences. But history shows us something different. Many of the most important developments begin quietly, they develop gradually, without excitement, without dramatic headlines, without immediate recognition. This is true in technology, it is true in business, and it is certainly true in financial markets. Real opportunities often emerge long before they become obvious, long before they become popular, and long before they attract widespread attention. This is why perspective matters. When we look at markets professionally, we are not simply asking what happened today, we are asking what may still matter 6 months from now, 1 year from now, or even several years from now. Because short-term noise disappears, but long-term trends shape the future. That is where much of our attention is focused. On structural changes, on technological development, on the movement of capital, on the evolution of industries, and on understanding where the market may be heading over the long term. Of course, uncertainty will always remain part of the equation. No one can predict every movement, no one can predict every outcome, and no one can eliminate risk entirely. But successful decision-making has never been about certainty. It has always been about discipline. It has always been about process. And it has always been about understanding which information deserves your attention and which information does not. In many ways, this challenge is becoming more important than ever before, because every year there is more content, more opinions, more analysis, more predictions, and more distractions competing for our attention. The challenge is no longer finding information. The challenge is identifying what truly matters. At Fastflow Finance, we believe this ability will continue to separate those who simply follow the market from those who genuinely understand it. Because not everything that attracts attention creates value, and not everything that creates value attracts attention immediately. Thank you for your time, and I look forward to seeing you in future discussions.